Okay, so if there are no questions, we are moving on to the last question of the question 4 of the 2013 Fundamentals of Accounting Examination question paper of SUP. So in 4.3, we are asked to draw up our balance sheet statement. So the first thing, you write the heading, statement. The heading is statement of financial position. S of Omeya Golf Club is at 31 July 2013. Okay, so the format of the balance sheet. Okay, so the first item we record in our statement of financial position are our assets. We first record our assets, starting off with our non-current assets. Non-current assets. Now under non-current assets, because they have depreciation, our non-current assets depreciate. Therefore, we should show our depreciation. That's the reason why we even have 3 columns. It's because of our non-current assets and it's because of depreciation. So we'll have the cost. We have the cost price amount. We have the accumulated depreciation, and then we have the book value. Okay, so we start listing down our non-current assets. So we go to our information given, we start listing down our non-current assets. So the first non-current asset we have there is the clubhouse, the house. Our clubhouse is the first non-current asset, and we said that land and building does not depreciate. Land and building does not depreciate, and therefore that's why you will have 0 accumulated depreciation. So the cost price of our club is 210,000, and because it does not depreciate, the book value stays the same. So the book value stays the same. And then we move on to our next non-current asset. So what other non-current assets do we have there? We have furniture. So what is the cost price of our furniture? Our furniture cost is 90,000. And what is our accumulated depreciation? So the accumulated depreciation that you record in your balance sheet is the accumulated depreciation given in the trial balance plus depreciation for this year. So accumulated depreciation to be recorded accumulated given in the trial balance, and then you plus depreciation for calculated depreciation for this year. Okay, so this simply means that now the accumulated depreciation that you record in your statement of financial position is the accumulated depreciation given in the trial balance. So it's accumulated depreciation given in the trial balance, and then you add your depreciation for this year. Now in this case, your club furniture had an accumulated depreciation of 45,000, and then we add our depreciation for this year. So 45,000 plus depreciation for this year, which is 18,000. So you add 18,000, and then you get your accumulated depreciation, your total accumulated depreciation that you record in your statement of financial position, which is 63,000. And because this is a depreciation is a loss in value of an asset, meaning that your furniture has depreciated with 63%. That's why you will need to subtract it from your cost price. So your furniture is no more valued at 90,000, but it's valued at 90,000 minus 63,000. So currently it is valued at 27 Namibian dollars, meaning that if you are to sell your furniture today, you will only sell them for 27 Namibian dollars. Okay, and then we move on. Our next asset that we have there is what? Is computers, ne? So our next asset that we have there is computers. So what is the price? So what is the cost price of our computers? Computers at cost is 51,000. Okay. And then our cost, our accumulated depreciation, we said is accumulated depreciation given in the trial balance, which is 27,000, plus accumulated depreciation that we calculated. Now we go back to our depreciation, and then we calculated a depreciation of 16,000 of 6,000. So you add 6,000, and then you get 33,000. So we get 33,000 like that. So what will be our book value now? So 51,000 minus 33,000, and then you get your book value is 18,000, meaning that if you are to sell your computers today, you can only sell them for 18,000. That is their current value because they are depreciated. And then you move on. Now, what other fixed asset do we have there? Another fixed asset that we have there is the fixed deposit or the investment. Ne? We say that fixed deposit is also a non-current asset. So you have FNB bond. We have an FNB bond, and FNB bond was 71,140. Yeah, sorry. Oh, okay. Now looking at this FNB bond, ne? So the FNB bond is actually not it's actually not a fixed asset. It's actually not a fixed deposit. Do you know why? Because the amount is on the credit side. So this simply means that it's a loan that you took from the bank. You understand? So the FNB bond is not an asset. It's not a fixed asset. I mean, it's not a fixed deposit, but it's a loan. If it was a fixed deposit, then the amount could have been on the debit side. It's because a fixed deposit is a fixed asset. But since because you have the balance on the credit side, that already tells you that is a loan, a bond that you took from the bank, that you borrowed from the bank. Do you understand? Okay. So these are the only non-current assets that we have, and therefore we have to add up our amounts. We need to add up our amounts. So how much are we getting?
Sorry, Sarah. Now, where do we record the FNB?
The FNB bond, that is a liability. It's a loan, so it falls under liabilities.
Oh, okay. Later
Yeah.
in the statement. Okay.
So 210,000 plus 90,000. Then you add 51,000 will give us 300. Our total cost amounts to 351,000. And then our total accumulated depreciation is 63 plus amounts to 96,000. So our total values, book values, will be 210 plus 27,000 plus 18,000. You get 255,000. Ne? Those are our current and our non-current assets. Now, because we do not have any other account that depreciate, you need to close off, you need to draw double lines under the two. You need to draw double lines under the two amounts of cost price and accumulated depreciation to show that this is where they end. There are no other items that depreciate. This is the end of the calculations. Ne? Those are the final amounts. Except for the book value. The book value is not the final amount because that is the main important part. We are still gonna use the 255,000 to calculate our total assets. So now that we got our non-current assets, we add our current assets. Okay, so what current assets do we have? Looking at the information given, okay, we have cash at bank. So we have cash at bank. Now the amount of cash at bank was how much? 15,700. So we record our amounts. We don't use the first column anymore, ne? Because the reason of us having, we are only supposed to have two columns. The reason of us having three columns is because of the accumulated depreciation that we had to show. We had to show our accumulated depreciation. We had to show our calculations, how we got our book values, and therefore then the first column is no more of use. So we are just gonna use the two columns, but it's not a must. So if it happens to be that you recorded in the second column, you won't be penalized because of that. So you have a cash at bank at 15,700. What other asset do we have? The current asset do we have there? Any other asset? Yeah. Don't forget of closing inventory. We have inventory. Now this our balance sheet has to do with both our trading account and our income and expenditure account, all information together. Ne? We do not separate them anymore, everything together. So we have inventory of bar or bar inventory, and our closing inventory is 9,890. So we have 9,890, and then we move on. What other asset do we have there? We still have one. Who wants to try? We still have one. We still have one.
Accumulated fund.
Accumulated fund, that is capital, and it falls under equity account. So if we check here, if you remember in the last session, in the last paper that we did, when I explained prepayment and accruals, I say that prepaid, please note it down, prepaid expenses and accrued income are current assets. Prepaid expenses and accrued income are current assets, while accrued expenses and income received in advance are current liabilities. Accrued expenses and income received in advance are current liabilities. Okay. Now, if we look at our income and expenditure, we have prepaid expenses. Ne? Stationery was prepaid, water and electricity was prepaid. So what we need to do is we need to add those prepayments together. We need to add our prepayments together because those are our current assets. So we have a prepayment of 1,360 plus a prepayment of 1,000. Ne? So in total we have prepayments of 2,630. Do we understand?
Why do we need to add them together?
Because there is one account, they are both prepaid expenses. But if you want, if you feel like you get confused, you can even write what is stationery prepaid. It's not a must that you can add them together, so you can even write them separately. But if you have to write them separately, then you need to write them as follows. So first you have stationery prepaid. So stationery prepaid is 1,360. And then you have water and electricity again, I think. What other prepaid? Yeah, water and electricity prepaid. I think this would be much better. And then you have water and electricity prepaid. So don't just write stationery here. You should write stationery prepaid because stationery on its own is an expense. Water and electricity on its own is an expense. That's why you need to write stationery prepaid. If the moment you write prepaid, then it already tells you that that is a current asset of 1,000. Okay. So do we have any other current assets? On our information that you are given, we do not have any other current assets, and therefore we need to calculate our current assets, our total current assets. So we have 15,700 plus 9,890 plus 1,360, and then you plus 1,000. So in total you have 27,950. I hope you're getting the same answer. Did you get the same answer? Okay. So you get we get our total assets. Total assets are now non-current assets plus current assets. So 255,000 plus 27,950 will give us our total assets. So of 282,950. And then we move on to our last part of our statement of financial position, which is equity plus liabilities. So under equity, first we start off with our equity. So under equity, we only have accumulated fund. Ne? So we only have accumulated fund and then the surplus. You add the surplus. So how much is our accumulated fund? So we are told that our accumulated fund is 181,750. And then you add our surplus that we got. Our surplus is 25,260. Just hope we balance. 25,260. Ne? And then from there, we do not have drawings, obviously. It's non-profit making organizations. We do not have drawings. So in this case, accumulated fund, add surplus, and then we get our total equity amount. So 181,750 plus 25,260. And then you get 207,010 like that. Now with the surplus is just the net profit. You know, in the trading businesses, you have capital. So accumulated fund is the same as capital. Surplus is the same as net profit. It's only the terms are different because of the different type of because of the different type of businesses that we are dealing with. So from there we have liabilities. Firstly, we start off with our long-term liabilities. Under long-term liabilities, we have FNB bond. We have the FNB bond, which is how much? We are told that the FNB bond is 71,040. 71,140. And because that is the only long-term liability that we have, so we add up all our long-term liabilities, we get 71,140, since it's the only long-term liability that we have. And then we move on to our current liabilities. So our current liabilities, in our current liabilities, what current liabilities do we have here? So obviously we cannot have creditors in here because we are dealing with NGOs. So obviously we will only have this. liabilities. We have an income received in advance of 1,000. Subscriptions subscriptions received in advance or pre-subscriptions. What am I writing? So we have subscription received in advance of 1,800, like that. And then we have, I think, accrued expenses. We said accrued expenses are also liabilities. So we had an accrual of 1,000 here, and then we also had an accrual of 2,000. So we have wages of bars accrued, and also, okay, wages of bar accrued. Let's record this. It's also a current liability. Wages of bar staff accrued of 2,000. And then we have insurance. Insurance accrued. It's either insurance accrued or owing, whatever amount is the same thing, 1,000. So from there we add up all our current liabilities amount. So obviously we'll have 4,800 under current liabilities. And I just hope our thing will balance. Okay. So let's try balancing off. 200 our equity plus liabilities. We get our total equity plus liabilities, which should be the same as your total assets. Okay. So how much are we getting? Oh, this is actually 4,800.
Yeah.
How much are we getting?
282,950. It's balancing.
282,950. This is the most satisfying.
2,950. Yeah.
This is the most satisfying moment of an accounting student, when your balance sheet balance. So that simply tells us that our information that we recorded is correct and it has balanced. So your total equity plus liabilities are the same as your total assets. Are there any questions? Questions? We still have 7 minutes. Let's use the 7 minutes for questions.
Is it maybe possible if you can repeat question 4 tomorrow? Question 443.
Question?
4.3.
Okay, If I should?
I don't know. Maybe I'm lost or I don't understand.
The balance sheet.
Mm.
Okay. This is the format of drawing up a balance sheet, which is assets equals to equity plus liabilities. So first you start off with your assets, your non-current assets. Now your non-current assets, these assets depreciate, ne? Most of these assets depreciate, meaning they lose value. And that's why you need to have 3 columns to show your calculations, to show how you calculate, to show how you subtracted your, to show the amount of your accumulated depreciation, and to also show the cost price and how you got your book value. So you have your cost, accumulated depreciation, and book value. So you start with now with the current, you start listing down all your fixed assets. We have clubhouse. Clubhouse is, this is just this is a building, and we said land and building does not depreciate. Therefore, that we will not have accumulated depreciation. We do not have accumulated depreciation on clubhouse. So the price, the cost price is the same as the book value. Will the value will never change unless your land or building appreciate, meaning it increases in value, but it never decreases in value. And then we move on to our furniture. Furniture is another non-current asset, and this one depreciates. So we got, the cost price was 90,000, and the accumulated depreciation. We said accumulated depreciation that we record in the statement of financial position is your accumulated depreciation that you are given, in the trial balance, and then you add depreciation that you calculated for this year. So if you add those two depreciations, accumulated depreciation in the trial balance plus depreciation for this year in furniture, you will get 63,000. So cost price minus accumulated depreciation will give you your book value of 27,000. 90,000 minus 63,000. And then we move on to computers. Computers also depreciate. The cost price of computers was 51,000, and then the accumulated depreciation, total accumulated depreciation is 33,000. Therefore, the book value became 18,000. You understand? And then from there, because these are the only accounts that depreciate, then there comes the end of our 2 columns, the cost price and the accumulated depreciation. That is the end of it. We do not need them anymore. So that's why we add up all our 3 columns, and then the cost price and the accumulated depreciation column, we draw double lines to show that these are the final amounts. There is nothing to be added again to these amounts. Do you understand? The double lines in accounting simply means that that is the last amount. There is nothing else to be added to that amount. That's the meaning of the double lines. And then you get now the book value, because with the book value, this is not the final amount. You still need to add your current assets. Therefore, that's why we do not draw double lines. So from there, after non-current assets, we move on to our current assets. We list down all our current assets. So we have cash at bank, in bar inventory, and stationery prepaid. We said prepaid expenses, all prepayments or prepaid expenses are current assets. That's all we have buy what stationery prepaid and water and electricity prepaid. So the first column is of no use anymore. But then if you happen to record in the first column, you won't be penalized. Ne? You won't be penalized. Okay. So you add up all your current assets together, and then you get 27,950. So non-current assets plus current assets will give you your total assets, which will give you 282,950. And then from there, that is the final amount. There's no other amount to be added. So you draw double lines. And then you go to your next part of your what? Of your the second part of your balance sheet, which is equity plus liabilities. Under equity, you start off with equity. Under equity, we only have accumulated fund and surplus. So you add your accumulated fund and your surplus together. Accumulated fund is just like capital, surplus is just like net profit. You add them together, then you get your total equity. From there, you move on to liabilities. Liabilities, you have long-term liabilities. We said we have the FNB bond or FNB loan. Therefore, it's 70 of 71,140, and that is the only long-term liability that we have. So we record it next to long-term liabilities in the last column of the final amount. And then from there, we have current liabilities. So in current liabilities, we have subscriptions received in advance, wages of bar staff accrued, and insurance accrued owing that came from our income and expenditure account. So we add them together, then we get our current liabilities amount of 4,800. So your equity plus liabilities should give you a total which is the same as your assets. So 207 and 10,000 of your equity plus 71,140 plus 4,800 gave you 282,950,000, which is which is the same as your total assets, meaning that your balance sheet has balance. In other words, in the balance sheet, you only record three elements, which is assets, equity, and liabilities. We do not include expenses. Expenses are recorded in the income and expenditure account. So yeah, that was the end of 2013 question paper. I will send through another question paper that we'll start with tomorrow. Any other questions? I will make sure to I will finish uploading all these videos today on YouTube, tonight on YouTube, because I don't really have a lot of work. Then I can send through the links tomorrow morning.